Now, I normally never do this. I never come out with 2 videos in one day, but I just came across an article that is astounding. It's depressing, it's sad, and it's astounding, and I think it's highly relevant to the video I just came out with this morning. It's from Bloomberg, and it says retail traders bailed on the market right before stocks rebounded. So in the last video I just came out with this morning, I talked about how sell-offs turn investors stupid. Like, it makes people make dumb decisions. We're emotional creatures, we follow the herd, and this is by far the perfect living example of it. Just this morning, just recently. Let's go through this together. From the article, let me zoom in on this for you. It says, wondering what the force was that turned an orderly decline into a full-blown rout this morning? Mom and pop bailing. So this wasn't big institutions, this was mom and pop selling. In a spasm of panicked selling, early Monday retail investors offloaded a net $1.36 billion worth of stock by noon, most of it in the first hour, according to the data compiled by JP Morgan Chase strategist Peng Cheng, I think is how you say it. By his estimate, share disposals were 3.9 standard deviations heavier than the full day average in the previous 12 months. So a lot heavier. And then they have a graphic here. Check out this graphic. This is the cumulative retail order imbalance for January 24th, 2022, which is today. This is the amount of selling that happened each hour. You can see that by noon, they were dumping stocks. Retail traders dumped stocks. They say while the rush for the exits helped drive the NASDAQ 100 down almost 5% in Monday morning trading, that's accurate. When I was recording the video just this morning, the S&P 500 was down almost 4%, and the NASDAQ was down 5%. The story fund, my portfolio, was down 6%. And now it closed in the green. It went from a 6% decline to being up like 0.5% today. What a turnaround in one day. The message goes on, though. It says, it's possible the news wasn't entirely bad for the bulls on the outlook for signs of seller exhaustion. So there's a group of people, and maybe hedge funds and different people that are the smart money, looking for seller exhaustion, right, when they've given up. Major averages staged a breathtaking reversal in the hours after the wave of sell orders landed. So everyone put in their sell orders, they exited out, and then the market completely reversed, having a widely positive day throughout the major indices. One of several such turnarounds in recent weeks. Stocks ended higher, erasing a 4% plunge in the S&P 500, while measures of share volume and severe price action in certain trading vehicles suggested to some that the worst of the selling, at least this round of it, has been reached. So I just wanted to highlight this and reemphasize this, that this is real. Retail investors lose tons of money all the time by this type of stuff. By selling during market downturns. After the market goes down 3 or 4%, they get scared and sell. Having downturns causes people to turn stupid with their money, makes them make dumb decisions, things that they're going to regret literally 2 hours later. They could have waited 2 hours and have had their money returned back up to 4%, right? That's a huge amount. This was $1.36 billion of not institutional money, but retail money. $1.36 billion of retail money. Do you know how many people's retirements that is? How many people's savings that is that they just gave up a quick 3-4% for no reason for 2 hours of waiting? So don't let this happen to you. If you're going to sell, do it during a good time, not during the midst of a panic. That is when you should be buying. So that's my quick update. I thought this was incredibly sad to read about, and I wanted to share it with you. So that's all for now.